I've been studying trading now for 2 years, and in the first 6 months of trading real money, I more than doubled my account by 144%. However, I'm not a full-time trader. I'm actually a busy parent, and I do not have a lot of free time. But I was able to find a strategy that allows me to trade without watching the charts all day long. So in this sort of ultimate guide to stock trading, I'm going to show you how you can go from newbie to confident trader faster than you think. So in our actual trading group, there are many beginners just like you that are mastering this low stress strategy. And if we actually just jump over to our group right now, there was just a post the other day by Matt, and Matt basically started trading in March of 2025, which was a tough time to start because we had all those drops in April. So his portfolio went down 18%, but now it's up over 70% by following the strategy that we're going to talk about in this video. So he basically says, stick to the strategy, you will be rewarded. And there's many other beginners in our school group. So you can find a link to our school group below this video. That what we're going to talk about in this video relates to the course that's in our classroom. So you come to classroom, you can actually come to the trading course. And this is a full strategy course that's going to relate to exactly what we're talking about here. So if you want to go deeper, you can come here, you can find all the modules, and you can find all the lessons. So what we want to really talk about in this video is just 4 things. We want to talk about the ideal strategy for beginners. We're going to touch on the tools that you need. This is going to be very quick and very basic. Then we want to review some basics of a price chart. And then we're going to talk about indicators, safe entries, and then managing risk and the mental game. So it's going to be an ultimate guide. The video is going to run on a little bit, but if you ever want to dive deeper into any of these topics, then certainly go and check out that free school group. So if you're a beginner, you're overwhelmed, there's a ton of info out there, you don't know where to start, hopefully this video can get you on the right path. Okay, so let's talk strategy. Why this momentum trading? Well, momentum trading, it offers us a low stress alternative to day trading. And we're going to explore why this is ideal for most people, especially most people with a busy schedule. So day trading has some pitfalls. If you just started, you're a beginner, you looked into trading just like I did, I thought day trading was really trading. So I didn't know that there were other strategies out there that would suit my schedule better. So with day trading, there are pitfalls that are tough for beginners. It's high stress. You need to trade in and out every day. You're constantly monitoring the charts. And then what comes with this is emotional decisions that are going to lead to losses. So it's high stress, tends to be a lot of emotion with trading. And that's going to require beginners to, unfortunately, lose some trades before they get going. So there's a higher risk that you can lose with day trading. Now, this is not to say there are no pros with day trading. Certainly there are, but I think for the average beginner, for you watching this right now, day trading is probably not going to suit your schedule. Now, momentum trading, so the strategy that we focus on in our group and that I've been trading real money with, we focus on buying stocks in established uptrends, and then we enter when there are pullbacks to support. And we hold these positions for maybe weeks, months, maybe longer. So we're not trading in and out so much, and we're able to capture bigger gains this way. When you trade in and out, it causes you to make more mistakes, and you don't get to appreciate the exponential gains that happen in the stock market. So it's less time commitment, less constant monitoring of the charts, and you're going to get a high win rate. So in the first 6 months, I almost had a win rate with my trades of 90%. So what you really need to do is just assess your lifestyle right now. Assess your schedule and pick a strategy that's going to work for you. If you can't dedicate maybe 2 to 5 hours a day on watching the charts, then day trading might not be the best fit for you. If you can just dedicate, 10 minutes a day, 30 minutes a day, just a couple hours a week, you can make trading work if you focus on a strategy that doesn't require a ton of time commitment. And that's what we talk about. It's great for busy people if you've got a job and family and so on. And then what we want to do is we just want to start small with analyzing stocks, focus on charting and learning the tools, learning the strategy without getting overwhelmed. Now, small doesn't mean slow. We want to get up and running. We want to learn the strategy and make trades. We just don't want to get bombarded with a ton of indicators, a ton of tasks to do, And we would just want to keep things simple in the beginning. So that's really the strategy in a nutshell. Now, with strategy comes your tools. Now, if you were stressed out about this, I can relate. I've been in your shoes and I've thought, what brokerage do I need? What software do I need for charting? Can I link them up? Is one going to be better than the other? If I sign up for one, am I shooting myself in the foot and so on? So the right tools are going to simplify trading for you. We're going to cover this right now. And I can tell you right away that with the strategy we use, this is going to be super simple. So all you need is a basic brokerage. You might already have one of these already. If you have investments, you've bought stocks, then you can just use that brokerage. All you need to do is buy and sell stocks. So, if you don't have anything set up, you can go to Robinhood, Webull, Interactive Brokers. There are tons of options out there. I'm going to show you some of them here. So basically just get a brokerage that allows you to buy and sell stock, and they all do. And then the other piece of tool, the other main tool that you need is a charting platform. So this is where you're going to do your research, chart your stocks, and this is called TradingView. So basically what you want to do is you chart stocks on TradingView, and when you're ready to buy or sell, you just open your brokerage in a new tab or on your phone and you place the order. So really to do this, if we just jump to Grok, the best thing to do is just say I live in the US, please tell me 3 brokerages that are easy to use and have fractional shares. So fractional shares, if you're starting with a small account, maybe you don't want to buy a full stock like Tesla that's at, over $400. You might just want to buy a piece of it. There are brokerages that can allow you to do that. So just go to AI, go to Grok, go to ChatGPT, plug in where you live, plug in what really matters to you, whether it's fees or fractional shares or ease of use. And basically Grok or ChatGPT is going to come up with a list of platforms to use. So it's coming up here, Robinhood, Charles Schwab, Fidelity. So I've actually already got those up here. So Robinhood, go to Robinhood, sign up for an account, easy, done. If you want Fidelity, go to Fidelity. If you want Charles Schwab, go to Charles Schwab. Again, if you want to research more of this to find the fees and everything, you can go deeper, but honestly, all you really need is a brokerage. Robinhood is going to work, Fidelity is going to work, or Charles Schwab will work if you're in the United States. Personally, I'm in Canada. All my investments were in Questrade before I started trading. So I just kept them there and I just trade with that platform. If you're overseas, Interactive Brokers is great for the UK or Europe. And basically that's it. So just ask ChatGPT or Grok to tell you exactly what brokerage works best for you. Now, the other thing that you need is a charting software. So you can come to this website, tradingview.com, and you can actually get started for free. You can go get started, and all you need to do is sign up for an account. You need to sign up or else they're going to just run ads with you all the time. So just sign up for an account with your email. Eventually, you're going to want to get this essential plan. But at the beginning, you can do all of this for free. And then once you've signed up, I'll just continue with my account here. You're going to be able to log in and you're going to be able to go to the products and go to the chart. So we'll do that right now, super charts. And this is a stock chart. So here we are. And I don't think I'm quite logged into my account. Let me go back to TradingView and just make sure I've logged in. Log in, sign in. Okay, so now I'm logged in. So here we are, and we'll just go and look at a Tesla chart, and we'll take off all these tools. And now we're logged in to TradingView. So basically, this is what we're going to use for charting stocks. So we're going to find good entries, good buy zones, find zones that are good for selling. And then once you find something here and you've done your research and you've done your charting and you've used the strategy that we're going to talk about, you just simply log into your Robinhood and place the buy or the sell order. So it's really, really that simple. A brokerage and a account with TradingView. And again, TradingView is free. So next, what you want to do is activate the paper trading account with TradingView. So it's best if you start paper trading, meaning trading with virtual money and testing out these strategies. So you can have a rule where, if you're profitable for 2 or 3 months, then you can move to real money. That would be highly recommended. You can trade in a simulated account. You can experience the emotions of trading without risking real money. So I would recommend that you do that. And then you can also go and build a watch list to get started. So a watch list is just a list of stocks that we are going to eventually chart. And the best way to do this is, again, to ask AI, or you can come to our school group and find a list. So basically, let's come back here in TradingView. And when you are logged into your TradingView, you can come down to the bottom here and open this panel. And then you can click paper trading and you can connect a paper trading account. So now you have TradingView set up with a paper trading account. You can trade simulated money and you can practice without risking real money. So that would be highly recommended. And then we want to build this watch list. So this is a list of stocks that I personally chart and track. And you can come here to watch list and you click add, and you can add different stocks. So you might be wondering, where do you find stocks? Well, if you want, you can come to our group. And actually, I just posted a list. You can come search list of stocks, or just search list. And I'll put a link below. And we just posted this list of bullish stocks heading into 2026. And you can come here and you can copy and paste this entire list if you wish. Also, what you can do is just go to ChatGPT, go to Grok and say, hey, it's 2026, 2025, whatever year it is. Please give me a list of bullish stocks in these trending sectors that I can copy and paste into TradingView. So I'm going to type that up here and show you what it gives you. Okay, so I wrote, give me a list of 100 stocks that look bullish heading into 2026 that are trending, that are in a trending industry. Give me a list I can easily copy and paste into TradingView. So Grok is going to think for a minute and you're going to get a list of stocks. And this is where you can just start charting your stocks. You can build your watch list based on the recommendations from AI. Okay, so Grok came up with this list. Here's a list of 100 stocks in industries like AI, renewable energy, EVs, biotech. So big trending stocks. And here we've got all of them: Microsoft, NVIDIA. We've got Tesla. We've got Palantir. We've got BMNR. So that's a Bitcoin. We've got Amazon, Google, and so on. So great place to start. And you can refine your search for, focusing on just cryptocurrency industry companies, focusing on AI companies, energy, and so on. So just use AI to give you a list. And then you come back to TradingView and you can input these into your specific watch list. And what we want to do with this watch list is chart these stocks and then analyze them for buy and sell signals. So that is all the tools that you need to really get started with this particular strategy. So the next thing that we want to do is we want to master some basics in the price chart of TradingView. So chart basics, things like an uptrend, support zones, these are going to provide the foundation for safe entries with our strategy. So we're going to break down how to find those. So let's list them first, and then we'll jump over to the charts and actually look at some of these specific things. So to identify uptrends. So this strategy wants us to buy support zones in stocks that are bullish, that are trending up. The trend is your friend. We want to focus on that for this strategy. So we're going to look for higher highs and higher lows to confirm the buyer control. So that's market structure. It's a very important concept. It's the first thing that you should learn, market structure. So we're going to go over that quickly. Then we want to find support with that price chart. So support is levels where the price retraces to, and then it usually bounces. It's like a floor where the buyers come in. That's where you want to buy. When price retraces, comes lower, and then it eventually goes back up. That's how you make money. And we want to identify what's called a resistance zone. So this is a zone where you don't want to buy. There's a lot of selling pressure, and so many beginners make this mistake. A stock runs up to all-time highs and it goes higher and higher. Everyone jumps in, they chase, and suddenly they're buying at a resistance zone and they don't know that's a resistance zone. And the stock gets sold off and it retraces 20% and they panic and they sell and they lose money. This happens all the time. It's happened to me in the past. Avoid resistance. be careful, be cautious, do not buy at resistance. Very, very simple. And then we want to just understand the different timeframes with a chart. So we're going to look at a weekly chart, but you can look at charts that show daily action, hourly action, and so on. So let's jump over to our chart and look at some of this stuff. So we're looking at the Tesla chart, and I'll just go full screen here. And basically we want to understand when you are noticing a uptrend, a downtrend, and this is based on market structure. So right now we're looking at a price chart, and these candlesticks represent 1 week. So at the top here, we've got the W highlighted. So that means that each one of these candlesticks is 1 week. So I'll zoom in maybe on these two candles. Okay, so this green candle, it represents the Monday 1st, November 21st. So it represents the Monday to the Friday of that given week. And then this candle represents Monday, November 8th in 2021, and so on. So each one of these candles represents a week of price action. And you can change to a daily chart. And basically now each one of these candles represents 1 day. So this is the day opening at 9:30 a.m. Eastern time, closing at 4 o'clock, and so on. So if we look back at the weekly chart, you've got green candles and you have red candles. So the green candles means that during this week, price went up. And the red candles mean during this week, price went down. So if we zoom in even further, we can show you exactly how this is happening. So in this given week on Monday, the price opened at the bottom of the green candle, and it closed the week on Friday at the top of the green candle. So right up here, you can see the different data. So it opened at 381.67 and it closed at 407.36. So it went up 9.7%. And then the little wicks or shadows coming from all these candlesticks, that represents the high and the low. So during the week, this price went down to the bottom of this little wick, and it's showing right here the low. So the low was 372.89, and then the high was 414.50. So during this week, price opened here on Monday. It maybe went down a bit, and then by Friday, it closed here, and maybe during the week, the midweek, it went up that high. So it opened and closed there. And this week it's red. So it opened at the top of the candle. So it opened at 383.26. And maybe during the week it went high. It went as high as 399. And then it went all the way down to a low of 329. But then on Friday, it finished the week at 344.47. So that is how these candles work. And again, these represent weekly candles because we're on the weekly chart. So we want to determine now if we are in an uptrend or if we are in a downtrend. We want to buy stocks that are bullish, that are in an uptrend. So back here in November 21, we can see that Tesla was hovering around this $400 range. And we can see that the price is sloping downwards and we have a low right here. So we have a high and we have a low. And again, this is market structure. So things aren't always perfect. Stocks don't go in a perfect zigzag, but they do follow a zigzag. It's just not always a perfect triangle with peaks and valleys. But we have a general high here, and then we have a low here. And then what do you notice about here? This high with these prices in these given weeks, it's lower than the high in this area. So that's called a lower high. And then the price retraces down and it comes down to a low valley here. And what do we know about this low? It's lower than the previous low. So we're making lower highs and lower lows. That is negative. That's bearish. We don't want to buy stocks in this scenario. And then what we do is we come up here, and what do we notice here? We have another lower high. So this high in this area during these weeks, it's lower than this and it's lower than this. Market structure here is bearish. And then what happens? We fall all the way down to $100 in January 2023. And then what happens is we bounce up and we have a high here, and this low is now higher than this low. So we are trending up. We have a higher low, and then we have a high that is higher than this high, another higher high. So here we are in an uptrend. But what happens? We have a low here, which is another higher low. So everything's looking good. But here we do not make a higher high. We make a higher low. And that should be a warning sign that the trend might be changing. And what do we have here? Another lower low. So this low, it's lower than this one. And then this high, it's lower than this one. And we are trending down again. And we trend all the way down. We go from 280 around 300 here down to 142. So in this market structure, we don't want to buy stocks in this market structure. And then moving on to the present day, we can see that we're making a high, low, higher high, higher low, and Tesla is currently bullish, building a good support base around 439. So that is market structure. It's very basic. We're looking at the weekly chart. Things don't always line up absolutely perfect, but you can definitely see that in this area, 2022, 2023, you wouldn't want to buy Tesla. The stock went way down, but now here, this is bullish. This is where you want to buy Tesla in a market structure that looks like this. Now, we also want to identify what's called support and resistance zones. And I think the best way to come and do this is to come to our school group in our classroom section on our course. We actually have a module on this and a lesson. So I'll come to this lesson. Again, you can access this below. And we want to look at this chart. So to find support and resistance, you can look at historical price data and combine it with market structure to help you find good entries. So this is a stock of SoFi and it's a picture, and we'll look at the live chart as well. But based on these highlighted zones that I have here, we can see past areas of support and resistance. So with this strategy, we want to buy at support. We don't want to buy at resistance. So the stock price started here and ran up to this zone. And we can see here a lot of selling pressure happened here in this zone. So more sellers than buyers ran up here and forced the price down. And then in this zone, the buyers step in. So there's lots of buyers here and the stock goes back up. There's lots of sellers here. The stock goes down. The buyers step in and then the sellers step in here. So this is a resistance zone. This is a support zone. And the sellers took over and the price dropped all the way to this area. And we had a couple weeks where the buyers stepped in, but another big red candle and we come down here. And then we sort of flip between support, resistance, until we break up. And what do you know? This previous support is now a resistance zone and we fall back down to this support and resistance zone here. The buyers come in, the sellers come in, the buyers come in, and then the buyers overwhelm and we run back up to this zone, which is previous support, flip to resistance. So this is a resistance zone. We don't want to buy here. The stock comes all the way back down to perfect support here and the prior resistance zone, and it comes back up to a resistance zone up here. So this happens in a lot of stocks. You can just check the price history and you can find previous support at the previous resistance zone. Now we're going to also look at a tool that's going to actually outline this as well, called a fib tool. But that's the basic of support and resistance. Buy support on bullish stocks that have good market structure. Don't buy resistance on those particular stocks. And then we also talked about the importance of time frames. So we are again looking at a weekly chart. You can look at a daily chart. So you can access and study market structure based on daily candles. And you can even go and study it based on monthly candles as well to get like a big picture view of what's happening. So again, there's Tesla, and look at the market structure here with these months, not good. The market structure here with these months is much more bullish. So now we're going to actually look at some indicators that are also going to help us identify some of these zones. And for the stock that we just looked at, SoFi, we're going to identify the tool that's going to show us those various support and resistance zones that we just looked at, that we saw based on just looking at the historical data. There's actually a tool that's going to help us highlight support and resistance zones. So let's go now and just talk about these key indicators for something called confluence. So there are technical indicators that we use in TradingView to find confluence. That means that there are several areas telling us, hey, this zone is support. There's a high probability that the stock is going to stop here and bounce back. That's buy this stock. So that's what we're going to look at now. So why don't we list them and then we'll go over to TradingView and actually look at them. So the first tool that we look at is what's called the Ichimoku Cloud. And with this tool, with one look, you can get a clear picture to see if a stock is bullish or if a stock is bearish. Very good tool. Next, we look at a fib retracement tools. So this tool is going to find key support and resistance zones based on math. It can be very accurate for stocks. Then we want to just add moving averages for confluence. So a moving average just basically smooths out the average of the price over the given 50 days, 100 days, 200 days, or 50 weeks, 100 weeks, 200 weeks, and so on. So it averages out the price. And we want to layer all of these indicators to find an area that is telling us, hey, this is a good support zone. The stock is going to stop here and it's going to retrace up. That's where we buy. So let's jump over to TradingView and we'll look at these three areas. Okay, so we're back on TradingView and we have the Ichimoku Cloud indicator on the chart. And we're looking at a Tesla chart here in this video, and it's a weekly chart. So to get indicators in TradingView, come to indicators and you can just search for them. So this one, you just type in Ichimoku Cloud and it's the first one there. And I have it favorited in my panel here. So it comes here. And here are my indicators. So we're going to put on the Ichimoku Cloud. And basically with this indicator, with one look, you're able to tell if a stock is bullish or bearish. So right here, we can see that Tesla is bullish. And why? It's because we are above all these indicators. Now, I'm not going to dive into the details of every single one, but I can just tell you that the blue line is called the conversion line. And basically it's a average of the 9 previous periods, so the 9 previous weeks, and it tells you the shorter term momentum. So when a stock, the price is above the blue conversion line, that is generally bullish. So that's a good sign. So we're above that. The baseline is the same thing, but it's a slower average, meaning it takes into more data, and we are above that as well. So that's more of a medium term trend indicator. So we're above that. We are above the conversion line. We're above this baseline. We are above this cloud. So you can see this cloud, it forms with various calculations, and we are above the weekly cloud. So that's positive. And the future cloud, it's red here, but it's green there. So we are above all indicators. Now there's one other one that we don't always use, so we won't pay attention to that. But with one look, we're looking at this chart, it's bullish. And we can also go back to other charts that we looked at here, this chart. So with one look, does this chart look bullish or bearish? It is very bullish. The conversion line is upward sloping. The baseline is upward sloping. We are above both of them. The cloud is green. We're overextended a little bit, but this stock is bullish. Now, if we go back to Tesla and we talked about, back here in 2023 and 2022, when the market structure was bearish, if we kind of take one look at this area right here, is this stock bullish or bearish based on the Ichimoku Cloud? It's bearish. We are below the conversion line. So the short-term momentum here is not good. Here we got above it a little bit, but what does the cloud act as? It acts as resistance. So many weeks we could not penetrate through the cloud. It breaks back down and now we are, sloping down severely. We are below the conversion line, below the baseline. The future cloud's red. We are below the cloud. So this is a bearish chart. So with one look, you can use this tool to gather that information. And I want to show you just one other example. If you go down to the Bitcoin chart, and if you put a monthly chart on for Bitcoin, so we'll see where we are here. And we just look, so all these candles now represent 1 month. So it's a lot of price data here. And if we go into the settings and we'll just go and turn off everything but the conversion line. And what do you see here? When price is above the conversion line, it is bullish. So here we can see, we'll go way back to December 2013. On the monthly chart, we've broken down the conversion line. So we are in a big pullback for Bitcoin. And then finally it broke through and it rides this conversion line all the way up. And we had a big expansion of Bitcoin. And then the monthly candles broke down below this conversion line, flipped it to a resistance. And what do you know? We have a big pullback. We are below the conversion line. And here we sort of consolidate sideways for many months. And then finally we broke out and we ride this conversion line all the way up through this big exponential growth. And then we break sideways, we break below it. So we're bearish here and so on. And now in the present time, we are very bullish. We're riding this conversion line up in Bitcoin. And it comes back and tests it as support many times for many months, but it continues riding it up. So, until Bitcoin starts closing monthly candles below this conversion line, it's safe to assume that it is bullish. So that's the Ichimoku Cloud. And it's very, very useful to use. And we can use it to find different areas of support and resistance. So we'll put these different indicators back on here. I'm going to plot the cloud as well. So that's the Ichimoku Cloud. And again, you can go through various stocks. So many of these stocks are very, very bullish. Hood, we are above everything bullish. These Bitcoin miner stocks that we're charting, breaking out of the cloud, blasting up, very bullish, and so on. So the Ichimoku Cloud is a great one to use. Now, the other one that we talked about was a fib retracement tool. So we looked at this chart here, this SoFi chart, and we identified different areas of support and resistance just based on historical price data. But now we can also use a tool, and we can see how the tool can help you forecast future resistance and support zones. So future areas where the price is going to maybe stall, or it could be a good entry price. So in our tools, we can come over here to tools, and fib retracement is the first one. And I have it in my favorited in my toolbar, and we'll click that. And what we want to do is we want to find a high point. So this particular candle was the high point, 28.26, and we pull it down to a low point. So we'll zoom in here and we'll find the lowest candle here, which is right there. And we'll click, and we have this magnet tool on. So it allows us to find the highest and the lowest points very easily. And now we can basically view this and our low point here. So what do we notice? Well, price runs up, and where does it get rejected? Right into this fib level. This line is the 0.5 fib. So it runs right up and gets rejected perfectly. And where does it resort back down? To previous support and resistance zones, perfectly on this 236. So remember, these are zones. Sometimes they land perfectly on these fib levels. Sometimes they don't. They drop down and get a little bit more liquidity. But you can see rejected at a fib level. Where does it want to retrace to another support zone right at this fib level here? Then it comes back up, retraces back to support, and finally breaks through. And where does it melt up? Right to this important 702. So the 702, the 786, and the 886, these are like the final fib levels to break before it continues on into all-time highs. So there you can see many weeks rejected at the 702. So it needs to retest support and wants to come all the way back down perfectly to the 382 fib. So if you're watching this stock and you're analyzing it and it starts to break some of these support zones, well, you can state with good conviction that this might be the next good support zone, and touches and continues on. Then it melts back up and, for a few weeks rejected at the 886, breaks out, back tests the 886, and now we're getting rejected. And we've got some resistance here at the previous all-time high. So when you're analyzing these stocks, this is an area where you don't want to buy. A lot of people, as we mentioned before, when stocks run up to their all-time highs, they buy, but there's selling pressure with this fib. What we want to do is wait for it to confirm that it flips from resistance to support. So maybe many weeks as building a base on top of this area. Or SoFi might want to retrace back and come back to the 886. And this would be a great support zone for a great buy entry. So there you can just see, if you compared, what we just looked at here with a fib tool with our previous discussion on just analyzing historical data by viewing, this area as resistance, flip to support, this area as resistance, flip to support. You can see you can use this tool to effectively map out support and resistance zones. So that's a great tool that we use. The other thing that we can use are just moving averages. So if we just put the Tesla chart back on, and we come here and we put on a simple moving average, and basically if we just go and look at the 50-period moving average. So again, this is going to smooth out the price of the stock. So this is a weekly stock. So each data point represents the previous 50 weeks, the average of the previous 50 weeks. And if you scroll out, and you can just see that moving averages help you understand the trend of the stock. So generally, when a stock is above the 50-week moving average, then it is bullish. So here we can see, Tesla's been above the 50-week moving average. Here it's doing well, it's bullish. And then here we have a couple weeks where we break below this 15-week moving average. So we're sort of consolidating sideways. Now we're below, and we consolidate sideways until here it flips to resistance, and we break down, and we can't maintain this average as support, and we break down. And then finally, many weeks later, we break through it and we blast all the way up and back test it. And now we can see that we are bullish because we are riding this moving average and we are above it. So anytime the stock is above the 50-week moving average, that's bullish. And then what happens here, we can see, we break down, it acts as support. We break down, we flip it to resistance, and we come back up in this zone. And look, for many weeks, boom, 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 resistance could not break through. That's a warning sign that it might want to retrace, and it retraces all the way down here to 100. And then we sort of consolidate sideways for, several weeks here. Once again, break down, but now we've sort of flipped it to support. And now in the present day, we're again riding this 50-week moving average up. So that's just another tool that you can add, and you can add it in different time frames, the daily, the 4-hour chart. The moving averages act as another indication that a certain level in the price chart might act as support or resistance. So those are just some of the tools that we can use when we are looking to make an entry, find support, find resistance. The number one rule with this strategy is that you just buy support and you be cautious and careful around resistance. So if we jump back to our presentation here, the second last thing we want to talk about is finding high probability trades to enter. So we sort of talked about that with those indicators. Basically, the high probability trades, they're going to come from, scanning your watch list, using our entry rules, and then executing the trades when we find good support zones that have confluence. So there might be a fib level that is acting as support. There might be support on the Ichimoku Cloud if that's trending up and doing well. The market structure is doing well. And then there's a simple moving average that is coming and acting as support. You've got a couple areas of confluence saying that that's a good support zone in a bullish stock. You can make a buy, and you're just going to make money this way. It's very stress-free and easy to execute. So what we would do, we scan for setups in our watch list. So over time, you're going to build a big watch list out where you chart the stocks, and then you can scan it every day or every couple of days, whatever your time allows, and you can set alerts. So, if you feel that when a stock retraces to a certain price, there's good support there, that could be where you set up a buy order. And with your strategy, with any strategy that you're following, you're always going to want to understand your position sizing. So for our strategy, we enter at 1 to 3% of our portfolio value. And what that allows us to do is make small entries. And if the stock retraces to further levels of support, we can enter again and get a better cost basis and get a better risk reward if a bullish stock retraces a little bit further. So position sizing is very important for your risk management, no matter what strategy you're using. And again, if you don't have time to watch the stocks and the charts all day, you can set up limit orders. So you can set up your charts, identify good support and resistance zones, and then you can set limit orders that say, when the stock reaches this zone, I'm going to buy or I'm going to sell. So it's very good and easy to do, especially when you can't watch or don't have access to the markets during all hours of the day. And then what we want to do is we scale in gradually. So you dollar cost average in and just accumulate bullish stocks at support zones and hold for exponential growth. And the same thing when a stock is looking like the momentum is fading, then you scale your positions out. So you don't want to sell everything at once. That's very emotional, but you can scale out and you can scale into your positions. So the last point we want to talk about as we wrap up this guide is just the importance of managing risk and building a winning mindset. So risk management in terms of, managing your emotions and managing your position sizing, I think can be very emotional. So it's important that you follow the rules of your strategy and stay really disciplined. So one great way to do this is to track your trades. You can journal them in an Excel spreadsheet, or if you're in a community, you can journal them in the community. You can share your trades there to keep yourself accountable and to get feedback, or just a simple notebook. There's some free apps as well. Stonk Journal is going to allow you to journal your trades. I think it's Stonk or it's Stock Journal. But there are Excel spreadsheets as well. In our community, we talk about those. We give away a link to a free spreadsheet that's very easy to manage. But the bottom line here is you want to journal. You want to journal your entries, journal your exits, and then you can visit them and understand if you were making sound trades or if you were making emotional trades. And then with this, we want to focus on a good mindset for trading. We want to follow the rules of your strategy. So you eliminate trading with emotion, you eliminate chasing, you eliminate revenge trading and everything like that. One of the biggest things is the fear of missing out and buying breakouts and chasing on green days. But our rule states that you only buy at support. So if you have a strategy that has clear rules, it's going to help you when you fall into these emotional traps with trading. We actually had a video about that, which I will link below, which is very good to review when you're first getting started, because the emotions of trading are very real and could really affect your ability to be profitable with trading. And then, the last thing that we mentioned quite a few times here is about joining a community that trades the strategy that you are focusing on. Our school group is great for getting information, watching market analysis, getting courses on the strategy that we're using, and just being accountable to the group. You can share your trades, you can journal your trades, and it's just going to be a good environment for you to learn and practice your strategy. So I think we'll wrap it up there. Here's a quick review of what we covered in this big guide. We talked about momentum trading, how it's less stressful than certain other strategies. We accumulate bullish stocks at good support zones. And when they retrace, we buy more and we hold these positions rather than trading out in and out so much. It's less stressful. It requires less constant monitoring of the markets. We talked about the tools that you need. You just need a brokerage that allows you to buy and sell stock, and you need a software like TradingView. TradingView is going to be what you will want to do. TradingView has a lot of tutorials on the website itself, and over time, you're going to be able to master it. It's not difficult. At first, things always look difficult, but you will be a TradingView master within a few short weeks. We talked about some basics like market structure. That's probably the thing that you really want to focus on. You can just look at the market structure of a stock and you can really understand if it's bullish or bearish, whether you should buy that or whether you should look for other opportunities. And then we talked about specific indicators to find, precision zones of support. So the Ichimoku Cloud is going to tell us if a stock is bullish or bearish with one look. Fib levels will indicate really good zones of support and resistance to either buy or avoid. The moving averages are going to help as well. And there are other tools that you can use to build confluence and have conviction in your buys. And that's really important when you are making trades. And then lastly, risk management and the proper mindset. So you want to journal your trades. You want to understand the emotions of trading. There's that video that we recommended there. And then have a strategy that tells you exactly what your entries and exits should be, your proper position sizing, because if you start not following those rules, you're going to make trades at the wrong time with the wrong position sizes, and you're going to leave yourself in a position where you are exposed to losses. So you certainly don't want to do that. It's important to build discipline to follow the strategy that you are focusing on. That's easier said than done. It sounds easy that, hey, just follow the strategy. But, when you're first starting out, trading is emotional and it can actually be quite difficult to follow your strategy. So that's it. If you liked what you found in this video, again, our school group, you can find a link below this video, has a course that goes into what we covered, but just in greater detail with more of a scripted type of video. I know here we're sort of unscripted and not as polished, but you can certainly come to our free group and check out that course. And I hope that you found it useful. And on the screen right now, I will put up another video that I think you will find helpful.